Welcome to this presentation. I am Dr. S. Jacqueline Arokya Selvi, Associate Professor and Head, Department of Commerce CA, Nirmala College for Women, Coimbatore. Now I am going to talk about the topic on fund flow statement. Fund flow statement is a statement prepared to analyze the reasons for changes in the financial position of a company between two balance sheets. It portrays the inflow and outflow of funds, that is, sources of funds and application of funds for a particular period. Now I am going to talk about the objectives of fund flow statement. That first objective is knowledge of financial position. The fund flow statement indicates the addition in profits, which is a boon to shareholders. The division of profit can be planned. Next objective is knowledge of addition in share capital. The fund flow statement can highlight the changes in share capital. Next one is knowledge of addition or reduction in share premium. The fund flow statement shows the fluctuation in share premium. This increases when shares are issued at premium or when preferential shares or debentures are reduced. And the statement shows key information at a glance. Fourth point is knowledge of profit or loss of operation. It shows whether an organization is earning profit or sustaining a loss. Fifth point is knowledge of addition in long-term borrowings. So this statement can show the additional amount borrowed by issuing debentures. Next one is knowledge of decreasing working capital. The statement shows the reduction in working capital. So when we are going to find out fund flow statement, we have to follow three steps. One is statement of changes in working capital. Then another one is fund from operation. Third one is fund flow statement. We'll see the first step, that is statement of changes in working capital. Working capital means the difference between current assets and current liabilities. We must know what is current assets. That is cash in hand, cash at bank, bills receivable, stock, debtors, short-term temporary marketable investments, prepaid expenses, accrued income, short-term loans and advances. These are the current assets. That means it's easily converted into cash within 1 year. Current liability, that is sundry creditors, bills payable, provision for taxation, bank overdraft, short-term loans or deposits, proposed dividends. So the difference between current assets and current liability is called working capital. Now we are going to see current assets. That format is base year, that means previous year and current year. Current assets are increased, we have to show it in the increase column. Current assets are decreased, we have to show it in the decrease column. And liability increase, then we have to enter in the decrease column. And we are going to see the decreased amount, then we have to enter in the increase column. The difference is called net capital. Second step is statement of funds from operation. Net profit after tax for the period we have to enter, take down. So in this amount, we have to add non-operating expenses. That is, non-operating expenses are depreciation, loss on sale of fixed assets, interest on debentures, goodwill written off, provision for tax, proposed dividend, interim dividend, transfer from profit and loss account. So we have to add with net profit after tax amount. Then we have to less non-operating incomes, that is interest on investment, dividend received, profit on sale of fixed assets, interest on bank deposits, refund of tax. So these are the non-operating income. We have to less from the above amount. Then we have to take down all those amount, add or less. Then we'll be getting net profit after tax. So from this amount, we are going to show fund from operation. Then format of fund flow statement. So this is the vertical format. Sources of funds, then application of funds. Sources of funds, that is what are the sources, in what way we are going to receive your amount. That is issue of share capital, issue of debentures, amount raised through long-term loans, sale of fixed assets, sale of investment, non-trading income, example, income from investment, dividend, etc. Fund from operation. Then decrease in net working capital. This is we got from the statement of changes in working capital. And fund from operation, that is adjusted profit and loss account or fund from operation, we are going to find out. So these are the sources of funds. We received amount from outsiders. Total, we have to show it in the total. Next, application of funds. So in what way we are going to spend the amount, that is redemption of preference share capital, redemption of debentures, repayment of long-term loan, repayment of tax, repayment of dividends, purchase of fixed assets, purchase of investment, net increase in working capital. So this total must be sources and application of funds total must be tally. Okay, so this is the fund flow statement. Thank you.